Hey everybody, good morning to you. Sorry for the little late start here on Trader Talks for today's market. This is Brent Morris here. I'm sitting in for Kevin Horner today. Glad to be with you. I'm also very glad to be joined by a good friend, Mr. Jeffrey Abelos, who's going to help me out this morning. Good morning, Jeff.
Good morning, Brent. Glad to be here with you. Happy Monday. Thank you very much for having me on the show. Looking forward to our discussion today.
Hey, glad to be back after a holiday weekend. And hey, we'll get right into this, folks. Let me hit some disclosures up first. Just a reminder, you can follow me on X at BrentMooreCS. In chat, we have Scott Thompson, who's on X as well, at Scott Thompson CS. And Jeffrey, I know you're not on X yet. We'll convince you someday on that one, huh?
Best of luck to you.
Okay. All right. Hey, just a reminder to everybody here, the information today is for general informational purposes only and should not be considered an individual recommendation or personalized investment advice. And we'll look at specific stocks today, but you know what? They're not actual recommendations. Options do carry a high level of risk. I don't think we'll talk about options today, but just keep in mind the extra risk there with those. And the paper money software application, which we will be using today, the Thinkorswim Paper Money, is for educational purposes only. Schwab does not recommend the use of technical analysis as the sole means of investment research. And past performance is no guarantee of future results. All investing involves risks, including loss of principal. And just, be careful with virtual currencies. Virtual currencies involve unique and significant risks. And I think that's good. What are we going to do today? We're going to do kind of the similar format that we use when Kevin is here, and that is we're going to look at the major market indices first, and then we'll look at individual sectors, different aspects of the market. And as you have questions, feel free to type those in the chat. We'll try and pick those up. Scott is great at helping out with that too, so he'll pick up things that we can't get to as well. And there we go. Hey, let me head on over and bring up the Thinkorswim desktop software. I'm going to start, actually, I don't want to start there. Let's start with the SPX here, the S&P 500. And so far, you know, uh, not off to a big start, but we have a trend. I have a 20-day and a 50-day moving average. We're holding up a little bit above the 20-day moving average, everyone. This comes after, of course, last week was a big week. We had, a lot of this is moved with the news out of the Middle East. And so far, it seems like it hasn't broken apart, I guess, Jeffrey. What's your thoughts on the S&P 500 here?
A couple things stand out to me, Scott, and I think a lot of the viewers are probably going to call this out too. But the 20 period, like you mentioned, is certainly on my mind. One of the things that I think is also helpful for traders out there is that when it violated the 20 period simple moving average, went right down to that 50. So it gave you a little bit of confirmation that, okay, people are paying attention to these simple moving averages. So that makes it a little bit more notable moving forward as we try to find our potential support and resistance. The other thing that caught my attention, Scott, is notice as we went back above that 20 period simple moving average, we did not get above our previous high set in the very early part of the month. That is a lower high. That is a little bit concerning if you're trying to make a bullish argument for what's happening in the market right now. So you notice how Scott's drawing these areas. For traders out there, that's generally not what you want to see if you're in the bull camp. If you're in the bull camp, what you would have liked to have seen happen is that pull back above the 20 period and then get even higher than its previous high. So what could be happening here potentially is the early start of a wedge pattern, which is to say it doesn't go too high, it doesn't go too low, and it might settle itself somewhere between those two moving averages, that 20 and that 50, as Scott is notating on the
Yep.
chart there. As we look through things, Scott, and I'll encourage our viewers to do the same, what is driving the market? Look through the largest components. Look at NVIDIA, Google, Meta, Apple, Microsoft. If you just rifle through those, everybody, when you have your own free time, you'll notice that this same pattern is playing out. You don't have the big, heavy movers pulling back higher and hitting those higher highs. They are also hitting lower highs. So that's a little bit concerning, and I think draws a little bit more attention to the bear camp, Scott.
Yeah, so we had kind
Brett,
of
excuse
this
me.
this trend, the trend that was actually fairly strong for a little while. Kind of ironic, actually, I would
Mhm.
say, in that while we did not have this peace agreement or the memorandum of understanding or whatever, for a while, this is what the market was doing. And now that we actually have that, the market is kind of maybe looking a little bit more sideways than bullish. Is this kind of a buy the rumor, sell the news type situation there, Jeffrey?
Really good question. I think it's a little bit early to say, and this is one of those pieces that you have happening in a lot of these, and we'll call it bubble-esque. I have no idea if we're in a bubble or not, but you see a lot of folks doing throwbacks to the dot-com era. This could be just a brief respite and saying, well, maybe we don't go a little bit higher, or it could be one of those times where it says, heck, if you look a lot of the components that I've got in my portfolio, they've done really well. It's okay to take a break and grab some water in the middle of a marathon. I don't think the race is yet over, Brent, to be honest with you, but time will tell. I have been wrong before in the past, and I will certainly be wrong again in the future. I could also be missing it in the present.
As we all are. Here, just to get a sense for the market breadth here, this is the S&P 500. This is the number of stocks in the S&P 500 that are above their 50-day moving average. And so right now we're a little bit over half, about 54% of S&P 500 stocks are above there. So we'll call it 50-50 more or less. So not bearish, but also not super bullish in terms of the breadth here. When you talk about, because a lot of times when we talk about the S&P 500, we have some of those big companies, you named some of them just a minute ago there, Jeffrey, that really just kind of dominate the index. Here you can see when we look at kind of the average stock out there, well, half up, half down, I guess, on that there. Hey, let's move on over to the NASDAQ. So here's the NASDAQ, and uh, bounced off close, at least, the 20-day, never got all the way down to the 50-day,
Mhm.
but again, certainly not a higher high. Not we're close to an equal high, but still maybe a little bit of weakening in the market. Is that how you'd characterize that on the NASDAQ there?
I still agree. Yeah, absolutely. And a question for you. So, as we notice the breadth happening, would you give more credibility to what's happening on the index, the S&P 500 or the NASDAQ, or would you give more weight to something like, oh, well, the breadth is starting to move about all of the sectors as opposed to being confined to the IT? So that could be a positive. I'm curious on your thoughts, Brett.
Well, what I'd say is that's a good question, Jeffrey, because we know IT, for example, which is going dominates the Nasdaq, it's over half the Nasdaq, is
Mhm.
what is really going to move the market. So I'm
Mhm.
kind of split in terms of what's going to move the market. Uh, the increase in breadth, maybe not as bullish for the market as a whole.
Mhm.
However, I think it's healthy. I think
Okay.
it's healthy for the economy to have a more broad-based participation in the economy than just the markets being dragged up by a few, semiconductors and mega tech and everything else lagging. I don't know. That'd be my two
Gotcha.
cents on that, Jeffrey.
Yeah.
What are your thoughts on that?
I think the same. Very healthy for the economy, a little bit better for the jobs outlook. But as far as the market goes, I still think those mega caps tend to be the ones that pull the market in an upward or a downward direction. So really good commentary and good insights, Brad. Thanks.
Yeah, so let's take a look. Here's the Russell 2000. So here's small caps. So we've been talking about large caps to this point. Small
Mhm.
caps have been the kind of, are breaking the mold here. They have
Yeah.
continued to have higher highs and higher lows as we
Yeah.
go ahead. Kind of, so there's lows, there's highs, and in fact, you can kind of look at these as flag patterns. Is this a
Yeah.
flag there breaking up, and then this potentially a new flagpole? I don't know what's going to happen to this. This could be the peak for all we know. But this is an all-time high, by the way, today on small caps there.
Yeah.
So we are seeing more strength out of small caps. there, Jeffrey. And that's, any thoughts on the small cap? Well above the 20-day, by the way.
I mean, to be honest with you, Brent, this is one of the most surprising aspects for me of the market. This is something I did not expect coming into the summer months. The reason being, we have still historically high interest rates. You still have a pretty decent clip of inflation, at least by the Fed standards. You would normally expect some of those smaller companies to not do as well, but you've got the small caps really driving a rally in and of themselves. So it's very difficult to try and parse through and say, well, wait a second, why are the small caps leading, but then the large caps aren't following along? Really tough to figure that out. That's something that I'm going to personally do some homework on, and I encourage the viewers out there to do the same as well.
Well, good, because when you get an answer on that, Jeffrey, let me know, because it's a little bit enigmatic to me as well.
Yeah,
Here's the 10-year, and just to divide that number on the y-axis by 10 to get the interest rate. So 4.5%. And, so we're off the peak, but it's still a fairly elevated interest rate there.
yeah,
Furthermore, I know with the new Fed, Kevin Warsh and some people were maybe more hopeful, but it's kind of become clear that the I don't know, the anticipation is the Fed's not going to be doing much in the way of cutting. In fact, this is the CME Fed Watch tool. So this is a third-party tool. This is not a guarantee of what's going to happen. It's just looking at Fed futures Fed futures, trying to decipher what the market expectations are for interest rates. But I want you to look at December here
yeah.
on this. Current rate, 350 to 375. Let me just change the color on my little marker there so you can see that a little better. 350 to 375. The market is basically saying there's roughly a 90% chance that we have some sort of rate hike by the end of the year.
Yeah.
I mean, that's very different than we were, 3 months ago or something like that, where more people were talking about possible cuts.
Very much so. And this can change on a dime. We've seen that
Yes.
before where something happens, something comes in, oh my gosh, now that changes from 90 down to 50 or whatever it is. But it is surprising, especially with Kevin coming in and saying, hey, I really want to lower interest rates. I want to lower interest rates. I want to lower interest rates. No, I'm not going to participate in the dot plot. It's very insightful to see the rest of the Fed members saying, well, we think we could probably have an issue with inflation. Our trajectory, at least the way the street is reading it, is going north as opposed to south on those rate increases.
Yeah,
Very,
no
very
doubt.
surprising. Yeah.
Yeah, and just to your comment there, Jeffrey, the Fed and Kevin Warsh has indicated they're going to tend to maybe cut back. I think his feeling is there's been maybe over communication of the Fed,
Yeah.
and so they may cut back on things like dot plot and things like that in terms of the future, and just like less speculation about the future, I guess, would be the way we proceed on that. So so given what we've seen in the market, and so S&P 500, we've seen that. What are we looking about in terms of implied volatilities, expectations on the market? VIX, we're a little bit below 17 right now.
Mhm. Yeah, the big spike that you had there is the conflict in the Middle East, some of the earnings announcements coming through, and if you correlate it with the S&P 500, which the VIX, to the viewers out there, it's just calls and puts on the S&P 500. So you should see a very strong correlation between what the S&P 500 does and what the VIX does. But the fact that we are below that 20 period simple moving average, we're below the 50, and we're below that 20 level. I think the long-term average, you guys will have to check me on this, I think it's somewhere around 18 or 19. And when we saw it for an extended period during the summer months, I think we got as low as 12 and 13 sometimes. That's unusual. So to see this start to come back down to a natural level below that long-term average, a little bit curious. Well, what exactly does this mean, Jeffrey? I think what this means to the viewers out there who are asking that question is we have gotten more used to, as traders and investors, a heightened level of mental volatility. And so when we see things that historically, call it 10, 20, 30 years ago, would have said, oh my gosh, I can't believe there's a conflict in the Middle East, that would have tanked the markets even as little as, let's say, 15 years ago. Now it's more like, well, this is more of the same. I think we're going to figure this out. And Brent, I think that's what's probably being reflected on the VIX. At least those are some of my insights. I am curious. So, what's your take as you look at the long-term movements of what we're seeing on the volatility index?
Yeah, so here's the VIX, and what I did is I took a 10-year chart and
Hmm.
I just drew a line, roughly at least, where the VIX is right now. And you
Hmm.
can see relative to where we've been. I mean, this is long before the Iran-US conflict here.
Yeah.
Uh, that this goes back to uh, I guess it's not, it doesn't go all the way back 10 years here, but this is kind of post-COVID on the left side of the chart. But you can see we're actually lower than we've been for most of the time, probably,
Hmm.
with seemingly a lot of uncertainty. So I don't know, but let me just mention this, and I'm going to go back to our shorter term chart here. Um, and that is if we look at this, so this is the VIX EQ, which is the constituent index for the VIX. In other words, the VIX is the implied volatility for the index as a whole, the S&P 500 as a whole.
Okay.
Well, some of those stocks are going up, and on the same day, some of those stocks are going down. And so it kind of moderates the S&P 500 as a whole. The index as a whole doesn't move as much as any individual stocks. So this is the average implied volatility for the actual individual stocks, looking at the 500 stocks of the S&P 500, the implied volatilities of those. Look how high that is.
Yeah.
That's gone up. So even though the VIX is lower, the index as a whole, we're seeing lower implied movements there.
Yeah.
Uh, the individuals, if you look at individual stocks, they're still moving right along, nice and spicy, so to speak, up and down. Yes. So I
Yeah.
always find that one interesting there.
Yeah. Very good insight.
So hey, let's just talk. I'm going to just bring up the SPX here while I just kind of mention some of the news here on this because actually, you know what? Let me go to oil because that obviously is something that has driven the market a lot. This is an oil future, but we're not talking about trading futures here today, everybody. This is just to get the price of oil here. And we could see it's gone down. We're down to 73, 74 bucks a barrel on this. Um, and this has come down. And news is mediators. Qatar and Pakistan said the U.S. and Iranian officials have agreed on a roadmap to reach a final deal within 60 days. Well, this comes after the weekend where there was some more language coming out of the White House and the president about, well, the deal may be a little bit more question. And I get the feeling, Jeffrey, this may not be the last of the roller coaster ride we see
What?
here.
Oh
Uh,
boy.
you know, not to shock you on that.
Yeah, I think you're absolutely right, Brent. And I think what we're seeing on the chart here, and this is something that I would be very careful of as a trader, and I'm going to focus specifically on those shorter term folks. I personally don't know how much credibility I'm going to give to moving averages during this time period, Brent, because this seems to be a very news-driven movement.
Yes.
So, over the past couple of weeks, we've had some fairly good news saying we're making progress towards coming to an agreement. So, you see that overall downward movement, almost like if you could imagine a downward moving wedge. All right, we don't go too high, but overall things are looking better and some of the expectations are starting to improve. I think that's what you're seeing right here. So if you're somebody that's thinking about trading oil or you're looking at oil as a component of movement underlying some of the individual equities that you have in your portfolio, keep an eye on the news as opposed to what you're seeing on a chart, at least from my perspective, because I would hate, Brent, to see somebody out there saying, well, gosh, look at it really paying a lot of attention to that 20 period simple moving average. I'll use that as my potential resistance level.
Yeah.
Then a news story comes out and just blows that thing all the way out of the water. And you go, what happened? I didn't know what was going on here. Watch out for the news as opposed to some of these technicals that we're normally keeping an eye on here during
Th-
trader talks.
that's a very good point because um, when we talk about news anytime,
Hmm.
Not even like an individual stock where it's not as news driven and when we focus more on the technicals. When news comes out, it can kind of wipe out anything we anticipate
Yes.
technically. And that's what we see when earnings comes out. That's why a lot of times when a company's about to come out with earnings, we may see a perfect, ascending triangle or something, or double top or whatever, but the narrative can certainly change once earnings comes out. That's
Yeah.
for the average stock. But what you're saying is oil is even more so because basically oil is really dominating the narrative right now on this.
Yeah.
And so this can certainly change. And as you mentioned as well, this this can drive the market. I mean, every sector, we have 11 sectors here, every sector is affected by the price of oil. So, no, we're not talking about trading the future here. We're talking about the price of oil, but it can affect the rest of the market in that regard.
Yes. Well said, Brett.
Okay. So, now some of you drive a car, a gas powered car, and uh, you're wondering, well, how's that affecting the price of gasoline? Here's gasoline futures. You can see it's come down a little bit, uh, but keep in mind it's not a one-to-one correlation between crude oil and the price at the pump. And so, but if you're like me and you drive by the gas stations and you will notice, at least it's kind of regional, I'm sure, but at least where I live, gas prices, fuel prices have come down a little bit there.
Well, that's good. I spend a decent amount of time in the states of Arizona and California, and I can say without a doubt, we are not seeing a whole lot of this at the pump.
Okay.
So shout out to those people across the country that are enjoying this movement south. I
Okay.
want
All
those
right.
tanks on us.
Yeah. Well, excuse me. Yes, I know. California has a reputation in that regard for the gas
Yeah.
prices. Okay, let's turn on. Let's look at some other things here. Okay,
Okay.
gold. Here's gold. Gold after that kind of meteoric rise,
Yeah.
which was 6 months ago or so. It's been kind of a steady downtrend since then, and that doesn't seem to be changing right now. 20-day moving average, we're bouncing off of that. Any thoughts on the gold market there, Jeffrey?
Well, I think gold has a reputation as being either a safe haven or as something that you hedge when inflation starts to get a little bit runaway. And
Yeah.
right now, while you do have overall high expectations of inflations, you're not seeing people run back into gold. Brent, I also think this is a reaction to what had happened in January. Everybody started investing in gold. I do say
Yes.
everybody. I know that not literally all of us were investing in gold, but a lot of folks out there were investing in gold with the idea that, well, I'm going to buy it today, and then somebody else is going to come in and I'll sell it to them tomorrow for a higher price. And so that's where you really saw that exponential, almost parabolic increase in gold. I think people could potentially still be reeling from that impact and saying, well, look at how fast gold went up. Maybe that isn't how this should be reacting and responding. Perhaps I'm going to trim down how much gold I have in my portfolio. I think this may be more of a reversion of the mean trade as opposed to an overall narrative change and shift, Brent.
I think that's a great point, Jeffrey, because on some levels, a pullback doesn't necessarily make sense that much right now for the reasons you mentioned. But
Mhm.
when we had gold that was, down below 2000, this is a 3-year chart. And
Yeah,
all of a sudden we're up above 5,000.
yeah.
And gold, instead of just being a safe haven or a diversifier of portfolios or
Mhm.
that kind of thing, became a kind of a speculative investment where people
Yeah,
were going, hey, IT or gold, they're kind of looking the same here. I'm going to go with gold or things like that. When that attitude came out, uh, and when that narrative changes, that's what we've seen there. So I think
yeah,
that's an excellent point you make there
yeah.
on
Good call out.
that. Let's and just for uh, completion's sake, here's silver, kind of same deal, I guess, to a certain extent there. Um, and well, we're at it. Let's look at copper again. We're not talking about trading futures here. We're talking about the price of the metal. Copper's continued up. This is a 3-year chart. It's
Yeah.
gone up. Copper, not so much a precious metal, more of an industrial metal. And
Yes.
the economy has held pretty strong. I mean, we've seen inflation. Yes, we've got inflation. In fact, let me just do a quick side note here on this. We have PCE numbers, that's an inflation gauge, coming out this Thursday. In terms of economic reports this Thursday, that's a biggie, the inflation number, because that's what's the concern in the market right now is inflation. Sometimes it's other things that are bigger concern in the market, but right now inflation is a concern in the market. We've got GDP coming out on Thursday as well, but that's the final GDP report. And that's not the big, typically it's the initial GDP is the bigger one of the GDP reports.
Yeah.
And the final GDP is kind of just tweaking things a little bit, and it's not as big a report. So that's coming out. I'd say the inflation one's probably the biggest report. And on tomorrow we have manufacturing and services PMI numbers coming out. So in terms of the economic reports coming out this week to look ahead to, those are the ones to consider. But you know, yeah, we have some inflation concerns, but hey, labor market's staying pretty strong, economy's staying fairly strong, which is one reason why possibly one reason why interest rates aren't coming down much is, hey, it'd be more difficult to keep interest rates higher from the Fed perspective, even
Mhm.
though inflation's fairly high, if the economy were lagging, but it's not. And
Yeah.
so there you go on that.
Yeah. Keep an eye too for the viewers out there that don't already know about this. And I'm looking at the chat. A lot of smart folks in here. They're making comments and they go, okay, yeah, so they understand what's happening in a lot of these aspects. So kudos to all of you for being on top of this. But they refer to copper as Dr. Copper because it is an early indication in the market of either growth or of a pullback. Now, what I mean by that is, as you notice, you've got this upward moving trend. We had a high back in January of copper, came back, traded sideways, and now it's starting to come back up again. What that generally is saying to the market is that people are building. As Brent mentioned earlier, it's an industrial metal. This is something that's used in buildings and homes. A lot of the economy, when you think of, oh, let's get some hustle and bustle and start moving this thing along, that's where copper gets involved. So if you're saying, I want to read between the lines and get those tea leaves out, this might be your early indicator of, is there a problem? Is there a canary in the coal mine, so to speak? If you start seeing copper dropping below that 50 simple moving average or even getting down into the 5 range, that may be your early indication that, uh-oh, people aren't starting to buy things on a very large scale anymore. I'm going to look for areas where things could be going awry. So watch out for copper. I love that call out, Brent. Really, really glad you brought this to the fore during our discussion today.
Very good. And there's another asset class, another future. Again, we're not trading it, but another asset class, and that is crypto that I want to talk about here for a sec, Jeffrey, and get
Sure.
any thoughts you have on this. Yeah, but before we do so, let me just mention this. Digital currencies, such as Bitcoin, are highly volatile and not backed by any central bank or government. Digital currencies lack many of the regulations and consumer protections that legal tender currencies and regulated securities have. Due to high levels of risk, investors should view digital currencies as a purely speculative instrument. Here's Bitcoin. We're down. Well, is this a bottom that we've reached here around the 60,000 level? We're back up to 65. Not going up very quickly though,
Yeah.
Jeffrey. Thoughts on Bitcoin from you?
A bit of a conundrum in Bitcoin, similar to how you're seeing movement in the small caps going north, while the overall index, I think, is more in a sideways pattern. As the index was going higher, Bitcoin didn't follow along with that. Little bit of a yellow flag moment for those invested in Bitcoin. Why is it that when people went risk on in equities just a few months ago, Bitcoin didn't seem to enjoy the same trajectory? In fact, it almost did the inverse of what the overall market was doing. Brent, I think what you can draw from that is perhaps people are starting to look at digital assets and give it more of a critical eye, as opposed to the, oh yeah, let's mass psychology this thing and we'll all start investing at once because this could be the future. Maybe it is, maybe it isn't. Ultimately, the test of time will tell that story. But as you're noticing, really good call out, Brent, that 60,000 level really seems to be what a lot of traders are paying attention to. So if you're somebody that's saying, hey, I want to start getting into Bitcoin, or gosh, I thought I missed the rally when it was about to hit 100,000, you may have a secondary opportunity or even a tertiary opportunity if you weren't around during 2017 to get back into this space if that's something that you want to do. But just like Brent said, and I love the fact that we are regulated in this space so that we get the opportunity to give these wonderful disclosures throughout our productions. Um, but if you're getting into this space, just remember it is speculative. This is probably something you don't fill out the entire portfolio with, but rather just capture a certain pocket. And if you do decide to get into it, not a bad idea, Brent, in my experience, scale into and out of components. I've had so many times where I go, oh, let me buy everything. Sure enough, the day I buy everything is the day before everything comes down. The day I sell everything is the day before it all starts rallying back up again. So if you're going to be getting into the Bitcoin trade, perfectly fine. That's up to you. But maybe consider scaling in and possibly scaling in slowly, seeing what happens over these next couple weeks and months. But that's my thoughts, Brett. I'm curious what your take on that is.
That's a good reminder to everybody about keeping money management and risk as a priority. It's not all about, entries or exits and what has been going up. It's about capital preservation as well. So,
Yeah.
because you can have good returns, but if you get crushed on something and it's too big a part of your portfolio, you can wipe out years of good returns
Yeah.
with something that really goes down quickly. So, I think your words are well said there, Jeffrey. So let's move on. And I'm going to look at some individual stock. Here is AbbVie. So here is the news. AbbVie's up about 5% today. And AbbVie and Apogee Therapeutics announced they have entered into a definitive agreement under which AbbVie will acquire Apogee and its diverse pipeline of multi-clinical stage candidates in development across inflammatory and immunological diseases, including atopic dermatitis and asthma. Okay, I won't read more on there. But obviously that's a big mover here on this. It was kind of going down, dipped below the 20-day, up 5% roughly today on that. Nice trend. That's I don't know. Any thoughts on this chart here, Jeff?
Well, not so much on the chart as the overall movement. Normally, when a company buys another company, the acquiring company goes
Yes.
down because of the outlay. Here you have the company going up. Very unusual. So this would be something where you say, okay, let's look at what is actually inside what they are buying, because obviously the street thinks it's a very good thing that AbbVie made that purchase. So to see, oh my gosh, and then look at up 50%, which makes sense, right? You're going to go towards the price that they're
Yes.
paying for it.
It may be hard
But
to see. It's right up there. That's where the price is on that. So that's
yeah.
this is the company being acquired, and AbbVie is up though instead of down, is what you're saying.
Yeah, very notable. So that could lead to the idea that there may be a lot of pipeline potential that could be coming from this Apogee company. Now, I don't know about a lot about the biopharmaceutical space, but just knowing how acquisitions and mergers come about, seeing the company that is acquiring the other company go up, certainly 5% on the day they've announced the acquisition, very, very unusual.
Yeah, and so another speculation on this could place some pressure on Regeneron Pharmaceuticals, which is down 1.7% today. And given these kind of stocks move a lot, 1.7% isn't a lot,
Yeah.
but these biotechs are very infamous, I don't know, for M&A activity
Yeah.
and wild big movement on these as well. So
Yeah.
anyway, so that's case in point here, I guess, when we look at AbbVie on that. Here's another company in the news. This is not as big a news and not as big a move, up 0.6% here. This is Instacart, or that's commonly known as Instacart, was I think before Maple Bear, but news. They introduced Immersive Feed, a new short form vertical video feed that showcases meals and recipes, currently in pilot as part of Instacart's suite of inspiration ads. So, anyway, that's, I thought I'd mention that as one that is in the news here. Also, some stocks that I thought maybe we should mention are one, FedEx. They have earnings this week, Jeffrey, on Tuesday. And that's kind of a big, there's some companies where earnings, the market is just one of hundreds of companies in the market, big companies in the market, and they don't do much. But FedEx sometimes can be a little bit of a bellwether in terms
Yes.
of economic activity because it ships. This is, our economy is based on shipping stuff, and FedEx ships stuff. And so how well
Yeah.
they do can be also kind of a little bit of a, well, kind of like we were talking about copper almost earlier, kind
Yeah.
of a little bit of an indication of the economy here. That they're coming out with earnings on Tuesday.
Yeah, keep an eye on that. Very much if you're a big believer in Dow theory, which says you want to see the
Yeah.
transports and the industrials both moving north. FedEx being one of those big things, like Brent said, that moves a lot of stuff, that could be an early indication of, hey, are we still buying stuff? Is this still continuing to move north? If not, all right, again, a little bit of a canary in the coal mine, yellow flag moment. But right now, it looks like we are still continuing to move the needle in a bullish direction, at least as it relates to the economy, Brent.
Yes, absolutely. And uh, I should mention, because there is a little bit of news on FedEx. Well, I think earnings is the big story, but Bernstein lowered the firm's price target to $424 from 470. Well, 424 is still well above where we're at, but it
Yep.
keeps an outperform rating on the shares. And so, I don't know. They expect, in fact, the same analyst expects a 3% beat to consensus estimates. So I don't know how to take that as bullish or bearish, to be honest, there when you
Yeah.
lower the price target, but you have a pretty glowing report on it as well.
Yeah.
There.
Yeah. Also, I'm cracking up at the comments, everybody. I hope you guys know that if you hear me laughing in the background, it's usually because somebody threw in a funny comment. But very astute observations. I want to call out one by Barbara. Quite a few things going counter to usual accepted stock market tenets. I could not agree more with that statement. What that means to me, and for the viewers out there is a trade plan and a trade strategy that I employ, and I constantly tweak it. I have noticed that when things aren't in agreement, when something is moving north that otherwise shouldn't be, or something is moving south that otherwise shouldn't be, according to generally accepted market principles, that tends to be the time where a strategy I could employ would be pulled back. Where you say, wait a second, I'm not figuring out the narrative here. Why are the small caps moving north while the overall market is still in neutral territory and interest rates are elevated? Uh-oh, let me start to pull back on the positions that I'm employing. So I really like that call out there, Barbara. Thank you very much. Apologies, but thank you for giving me that moment there, Brent.
No, that's great. I appreciate that. And someone else lost it somewhere, mentioned Micron has earnings too this week. Those
Yes.
are the two biggies, I think, this week, FedEx and Micron. But there's some other companies out here. I can't really see. Today's the 22nd. So I'm just going to go to the S&P. Let me click on the right thing here. Let's go to the S&P 500 and just take a look at the earnings calendar for the week here. We've got
Carnival.
Carnival, we've got FedEx, and there's Micron right there. And
Mhm.
so, and then Nike, I think that's next week is Nike. But so there's some other companies. We're not in earnings season yet. Earnings season is going to be down here, is where really earnings season, July 14th looks like the day probably. But so just, keep in mind there's those always pop up there. Now we're just running down to the last couple minutes here, Jeffrey. Let me just see on
Mhm.
my notes if there's anything else I wanted to mention. I'm going to do kind of rapid fire,
Okay.
everybody. We're out of time here. Upgrades. These are all companies that have had upgrades in the market. ConocoPhillips, well, trend is down. Obviously, this is going to be very dependent upon energy prices and oil prices there. APA got an upgrade. Well, it's been going down, so we'll see, and if the upgrade can save some things for help it out a little bit. SCMI, SMCI, is that right? There we go. SMCI upgrade. Well, hey, up about 12-13% today. So that's a biggie. And to be an equal opportunity person here, we're going to look at some downgrades. Apple was downgraded. It shrugs it off. It's up a little bit up a little bit. CLF, Cleveland Cliffs, was upgraded, still down was downgraded, down 1.5% there. So we're out of time, basically, Jeffrey. And so what I want to do is I want to just remind everybody right now, if you're watching on YouTube, you're watching on the Trader Talks Schwab channel. If you like the content that we have and you don't want to, if you want to experience more of this type of content, we have a variety of different topics on this channel. Make sure you subscribe. You just click on the subscribe button, bottom right portion of the page. It's easy, it's free. If you've already subscribed, don't click on it again because I think it unsubscribes you. If you liked the session today, do me a favor and click on the thumbs up. And there was no survey, I don't think today. I didn't see one. I appreciate Scott in the chat. But before we go, Jeffrey, tell us what you do in your normal job when you're not on Trader Talks.
Generally, I try to help out our branches across Southern California better understand our trading and actively engaged investing clients by showcasing here's what they're talking about, here's how you can have that discussion, and then most importantly, here's the resources for those individuals. So if you have any questions about our trading or our self-directed investing experience here at Charles Schwab, talk to your financial professional wherever it is they are, and we can get you the help you need. That's what I do.
Awesome. Hey, thank you. Thanks for being on with me today, Jeffrey.
Thanks for having me on, Brent. Always a pleasure.
All righty. Well, hey, everybody, thanks for joining us. And I appreciate you all. Come back. This Trader Talks occurs each weekday, with the exception being Tuesdays. Tuesdays we have futures instead, but each morning, stay tuned. We have a crypto class now, new crypto class. Make sure you check that out. Ben teaches that. And everybody, have a wonderful day and a week ahead. Bye-bye.